If you are trading breakouts methods or even pullback methods or any bullish methods, the trick is to reduce your drawdown by only trading those methods when the market is going up or there is underlying buying coming into the market. And one of the easy ways or one of the tools which you can develop yourself and use is looking at the underlying breadth in the market. Breadth is really the number of issues or number of stocks participating in the up move or the down move for a day or for the week or for the month or for the period, whichever period you decide to look at. And the number of stocks participating in a move is going to tell you whether there's a buying pressure or a selling pressure. Currently, there has been a selling pressure, and this, when I show you the market monitor breadth figures, you will know that you could figure out there was a selling pressure underlying, and accordingly, you could shift your strategy to a short side or not really take long trades because you know that they are unlikely to work. So that's the way you can use market monitor and market breadth. So here is the readings today. You had one of the highest readings, which is 1733 as a reading. And why do you think that has happened? It's because the selling pressure was building up. You will see that like you had 908 days, 601 and 1733 day. And because of that, what happened was that selling pressure built up. When selling pressure built up, and today there was selling. But in an overall context, this is the daily reading. So that means 1733 stocks were down 4% plus today, and only 57 stocks were up. And in the last 3 days, you had almost 1500 plus 1700. So big number of stocks down. While in these 3 days, there was buying coming into the market because the underlying buying, you could see 501 stocks up, 279, 639. So in that period of 3 days, there were some breakouts which worked for 2 to 3 days. But overall, if you look at what is the most important thing which I look at for deciding whether to be bullish or bearish, and I've been bearish for some time now, is the number of stocks up 25% in a quarter. And if there are more stocks down 25% in a quarter, it is telling you that there is a selling pressure in the market. Stocks are not making upward moves, they're making a downward moves. And this figure turned negative around 4/6 2022. And you will see that till that time, the stocks were going up, or like there was a rally which was going up here, and you could see buying coming in here, right? You could see this was a good buying because underlying buying 317, right? 1000 plus 572 continuously buying was coming into the market. And that you can see when you are looking at something in the market like say SPY. If you look during that period, there was a buying coming into this period, right? And really this, when the market monitored primary indicator turned bearish 4/6 2022, you will see that 4/6 like around 4/6 2022, this is the day when, and since then the market has been going down. So as a result, when to trade bullish tendency, bullish setups, and when to trade bearish setup. During this time, I was trading bullish setup. Once the market monitors turned bearish, more and more bearish setups started showing up in the scan. And for many days now, I've been only doing bearish setup. Now, this kind of underlying buying selling pressure, if you measure yourself, you get a very good understanding of when to be aggressive and when to be defensive. Now you will see today these figures, number of stocks down 25% in a month is 642. So a lot of stock made a down move, big down move, right? And if you have a historical data, like if you see historically, that big a number is very, very rare, right? And this was 687. So it's telling you that, look, there is an overwhelming amount of selling pressure. But knowing that there is an overwhelming amount of selling pressure today is not really the way you use it. You have to use it when the primary indicator turns bearish. You have to start looking for shorting setups. And this way, if you use a breadth filter on top of your setup of buying either a breakout or shorting a breakdown, then you increase your probability of success. If during this time period when the market was experiencing buying coming into the market, if you tried to short, many short setups would fail. Similarly, if you are trying to buy setups during this period, they worked for 3 days or 4 days. But during this last 3 days, if you're trying to buy a breakout, it didn't work. So this is how you can use this information. And this particular information comes in from the scans which are run in TC2000. So all the information which you see there, the 57 number comes from this, 1733 comes from there, 393, 2001, and all these, every single column which you see there, the figures come, except for the S&P T2108 and all, they come from this particular layout. Now, the advantage of doing this yourself is that intraday also you can see how these figures are moving, because you have the raw data source, right? And you can see what is happening, and then accordingly you can change your approach. But if you really are serious about like reducing your drawdowns, then you have to be very clearly trading in periods when buying is coming in, if you are going to be long side trader, and short only when there is a selling coming into the market. And the primary indicator or the underlying buying selling pressure can be a good indicator, because you had 908 day, which is a big selling. You don't really see days like that amount of selling. Typically here 871, and during that time period, if you look at the indexes, right, and if you look at this 421 and you go back and see 421, on 421 871 stocks were down. And if you took a setup on that day, short setups, they worked very well. The reason they worked very well was because the selling pressure was great. So this is one of the ways to improve your trading. In the beginning years, people are just focused on setups. But once you have setup in place, you have to understand situations under which your setup is going to work very well and situation under which it is not going to work. An objective way of finding when to be aggressive on the short side, an objective way of finding when to be aggressive on the long side is going to help you. So, and that is the objective of using Market Monitor. And because this is a good day to look at that, look at this is where the selling started and it accelerated today, right? Now, if tomorrow buying comes in, and if the buying is really big number, 1,000 plus kind of a thing, it might set up for 2 to 3 rebounds. Or if the selling continues and you get another 800, 900, then the selling will continue. And when will you know that it is very good time to buy aggressively breakout is when the bread turns positive, right? When the bread turns positive, when buying came in within 2-3 days, the bread turned positive. And during this particular time period of 317, 318, if you looked at like this period, this is the period, right? 317, 318, there are a lot of breakouts which worked. Like you had a lot of breakouts which worked very well, like Nvidia, right, or Tesla, or many of them. So use market breadth as a filter and create your own market breadth indicators. It's not very difficult, and if you create those, you will have a much better understanding of what is working currently in the market, and accordingly changing your style. And if you do that, then you'll not be surprised. Like nobody who is following a breadth kind of a model will be surprised by the selling which has come in, because it was getting built in. You had a primary indicator which was in negative territory. So hopefully this gives you an idea as to how you can build a filter on top of your setups to improve their profitability.